Good evening, everyone. Saniona is a clinical stage biotech company. We are listed at Stockholm main market. I'm a co-founder of the company and has been CFO until 2020. I rejoined the company in 2022 in connection with a restructuring, and this time as CEO. In November last year, we signed a $610 million deal with Acacia for SAN711. And in January this year, we secured a euro 9 million financing for our joint venture, Cephagenix. And this means that a lot of things has happened here. We have two development programs now, fully financed by partners for essential tremor and migraine. And these successes also enable us to advance three additional assets internally. And today I intend to give you an overview of our assets, make some comments to our history, and outline the strategy for the next 3 years. So this presentation includes forward-looking statements. We have a broad pipeline, as you can see, several clinical assets, including 3 internally developed assets. We have several partnerships, including 2 development collaborations and 3 research collaborations. Our most advanced assets is tisofensin, which is under approval for obesity in Mexico with our partner Medix. And approval will generate royalties to Saniona and open doors to South American markets. Our research platform is focused on brain diseases. It has been validated through several partnerships, and apart from tisofensin, all our assets has been generated with this platform within the last few years. The platform and our research group is fully funded by our existing agreements. Financially, we are well positioned. Current resources and anticipated milestone payments allow us to progress 3 assets to start our phase 2 clinical trials within 2 to 3 years. There are additional revenues potential, including $10 million milestones payments from Acacia in 2026, potential royalties for Medix, maybe already by now, this year, and also potential new collaboration agreements. We have, over the last 2.5 years, followed our partnership model to reduce our reliance on the stock market. This business model has worked very well for us in the past. We have, in fact, made a significant profit over the years when we follow this model, while securing a robust pipeline and several valuable agreements. This slide shows our pipeline. Yellow programs are developed internally, dark blue with partners, and light blue are for sale due to a misalignment with our focus on epilepsy, neurology, and psychiatric diseases. The arrows indicate the potential progression of the programs over the next 2 to 3 years, if developed optimally. Our 3 internal projects are in preclinical studies, enabling phase 1 in 2026. So let me give you a few comments to 2 of these assets to give you the flavor of the potential. On the top, you have SAN2355 targeting epilepsy with potential in depression and bipolar disorders. It could be a very valuable program. There are 2 companies ahead of us in phase 2 and phase 3. Analysts value these companies' programs today at $2 billion and $3 billion respectively. SAN2355 is highly differentiated to these assets with the potential to become best in class on both efficacy and tolerability. We will already get an indication about that at the end of phase 1 if we can demonstrate that it is well tolerated at higher doses than our competing competitors. 2 steps down, you have SAN 2465, targeting depression with potential in rare pediatric diseases. Depression is a very common disease, 21 million patients in the US. The existing medicines were among the world's largest products before the patents expired. They have a common and very slow mode of action, where patients do not experience any improvement for 6 to 8 weeks. Moreover, 1/3 of the patients do not respond to these antidepressants. SAN 2465 has a novel mode of action and works rapidly in animal models, and it may even potentially cure patients within a few weeks. So this compound has the potential to address the major medical needs in depression as a fast-acting antidepressant and as a new treatment option for the many patients refractory to existing therapies. Partnered programs include tisofensin with Medix for obesity, now under regulatory approval in Mexico. And then SAN711, which we now are out-licensed to Acacia, they are developing it for essential tremor. And then we have in the bottom 3 research programs in Alzheimer's diseases, schizophrenia, and migraine, with AstraNordics, Boehringer Ingelheim, and our joint venture Cephagenix. So this slide shows the development in market cap since our listing on the Swedish Stock Exchange. It is divided into 4 periods. In the 3rd period, we had a go-to-market strategy in the United States, whereas the other periods we were following a business model and a partnering model. During the first period, we focused on creating new partnerships and spin-outs, which increased market cap for 50 million crowns to over 1 billion crowns. In the second period, we had a stable market cap around 7 to 100 million crowns, partly due to rights issues. We were delivering on our ongoing collaboration and conducted 4 internal clinical studies with Tisomet and 2 with partners, which not all turned out as we hoped. At the end of the period, RA Capital informed that they would be interested in investing in Saniona if we committed to list the company at Nasdaq US and focused on a go-to-market strategy for Tisomet in 2 rare eating disorders. So we switched to a go-to-market strategy in 2020 and 2022, but it did not work out as planned. Challenges arose during the US go-to-market strategy, leading to a high burn rate and a significant drop in market cap. By the end of the period, the financial market closed. The company was burning 100 million crowns per quarter, and the market cap came down to the same level. This was not sustainable. So we went through a major restructuring in mid-22, where the US office was closed and all people were made redundant, including senior management. I rejoined the company as CEO, and we returned to our partnering model. There was no other way. The company had significant debt, a very low market cap, and market was closed. The turnaround period ended with the Acacia deal in November last year. Market cap is now, as you can see, back at the same level as in 2019, although that the share price still has some way to go. However, we have 300 million in cash, a much stronger pipeline, and the funding for 3 years, enabling us to build more value into the company. We have never been in such a situation before. So let us turn to the Acacia deal. Acacia has worldwide license for development and commercialization of SAN711 for all uses. The product has completed a phase 1 study at the time of licensing. Acacia will start developing SAN711 for essential tremor, a market with a high unmet medical need. And there's no new drugs for decades, so the market is wide open for innovation. Acadia paid $28 million up front, and additional $10 million will be payable when they start the phase 2 study. The deal includes additional $137 million in development milestones and $465 million in commercial milestones. And then we have up to double-digit royalties on product sales. Acadia will fund all the program from as of today. They have reimbursed our ongoing phase 1 study, and we will also conduct certain fully funded activities on behalf of them during the coming year in preparation for phase 2. Thereafter, they will take over all activities. So this is a transformative agreement for us, and the market cap doubled on the day, and it enabled us to pay back our debt and secure funding for the next 3 years. So what is next for the coming period? I have outlined 4 key areas on this slide. Our primary focus is to advance 3 clinical assets to phase 2 with the aim of enhancing our strategic opportunities. This will enable us to replicate the success of Saniona deal on one asset, thereby securing funding for further development of the 2 other assets. We may also provide a potential exit for investors when we have 3 phase 2 assets in the same space. Finally, this could also enable us to attract financing through institutional investors. So we see a lot of options by doing this. In parallel to this, we will maximize the value of our research platform through our existing research collaboration. We expect this part of the business will be self-financed over the next few years, and at the same time provide potential upsides through milestones. Our aim is to remain independent of the stock market through new collaboration agreements. And then we have potential additional royalties on tesofensine from Mexico and Bayonne, which could provide further funding. And then finally, we will increase our visibility through investor conferences like this one and institutional outreach, ending our stealth phase during this turnaround period. I said we aim to remain independent of the stock market, which requires that we finance the company through partnership agreements. Few companies have been able to do that. However, we have a good experience with this model. As you can see in this slide, we have made a lot of deals since 2012, and we have generated a total of 755 million crowns in income since we started. Many of those deals still have a significant upside. During this period, we have also raised 890 million crowns in equity, as you can see at the bottom. So we are not quite there yet. However, it should be noted that Saniona raised 575 million crowns in 2020 during the go-to-market strategy, whereas we only raised 311 million crowns in other periods. And this is about the same amount which we had in the bank at the end of 2024, indicating that we have been at break even in these periods. But it's actually much better than this, since Saniona recorded an operating loss of 775 million crowns under the go-to-market strategy. In other words, 200 million crowns more than the company raised in 2020. So this means that we have delivered a profit about 200 million crowns during the period where we were following the partnering model. During this time, we financed 5 internal clinical studies, built a robust pipeline from scratch, and entered several valuable collaboration agreements with significant upsides. I think that this track record demonstrates the model's effectiveness and the company's ability to commercialize its assets. So we haven't been in stealth mode, but we have still done a lot of work here, and we have made significant strides in this period. So 2 new collaborations. We have selected 3 new promising clinical candidates. we have obtained a favorable opinion from tesofensine for approval in Mexico, and we have advanced 2 internal clinical candidates. And finally, we have raised financing to our joint venture, Cephagenix. In the coming year, well, we are now starting up the preclinical development to prepare our 3 internal candidates for phase 1. We are in principle also in the middle of a finance round, as we have some public listed warrants outstanding, which shall be exercised during the second half of March. The exercise price of the TO4 will be at a 30% discount to the average share price during the first half of March. I expect that this is the last time that we will raise funds through this type of financing. Other key milestones include tesofensine's potential approval in Mexico, with a subsequent launch 4 to 6 months later. Also, we may receive a potential milestone from AstronauTx during the year. And by the end of the period, we expect to have completed the preclinical development of the first program, enabling us to file for phase 1 application. The 2 other programs are expected to be ready for phase 1 during the first half of 2026. And finally, we may also present a potential new partnership this year. We are continuing our business development efforts. We still have several assets available for partnering, and we want to line up companies for a deal in 2026 or 27 when we have completed the 3 phase 1 studies. So I will stop with this my first slide, and thank you for your attention.
Thank you very much, Thomas. It's an impressive turnaround you've achieved, not least in the financing and partnership areas. One of your projects which has progressed the furthest, well, actually the one who has progressed the furthest, of course, is tesofensine. So could you give us some flavor on what's going on in Mexico? It wasn't the timeline there, a possible approval in the first half of this year. So I guess you've made some progress in those discussions.
I mean, it has been a long way to get there. We made the deal with Medix in 2016, I believe. They conducted a phase 3 study over a couple of years, and we were ready to file. They were ready to file for registration, I believe, in end of 2019. And then COVID came.
Yeah.
And that stopped the regulatory agency. There was also an election in Mexico, and then the entire management was changed in the regulatory agency. And since then, it has been gradually more messy and messy. A lot of companies have problems getting their programs through. And there's even then been a legal route you can go for. We are not gone that far yet. We hope still that it could go faster this way. But this is the situation. So it's a little bit difficult to say when it happens. But we have been waiting a very long time now. It's, as said, it was filed in end of 19, and now we are in 25. So I think that it is time, and we need to clarification during the first half this year.
Thank you. It was very interesting. I noted in your presentation that you mentioned focus on high potential assets. Is that a process that you're in now, evaluating which programs to push forward, or could you say something about which assets that you deem?
Yeah, we would. I can go back maybe to this one, but I said basically what I was moving. We are moving the. Oh, sorry about this. It's moving a little bit on here. My mouse here. Yeah. You see the top 3 assets here: 2355, SAN 2219, and SAN 2465. 2 of them positioned for epilepsy, but they all have other indications. And then SAN 2465, which is positioned for depressive disorders.
Right.
Yeah. So these are the 3 assets we will put in, and we will do it. You know, if you saw the deal with Acadia, this one,
Yes.
We asked for $40 million up front. But they told us, well, listen, it takes us a year to get this phase 2 started, so you're not ready for phase 2. And then we agreed to split it, so they will pay 10 million start of phase 2. And this time we're going to make it more proper. We will show that we are going to make 3 months tox studies while we're doing the phase 1, and that we have the tablets and the right things in place when we're doing the phase 1, so we are ready to go straight to phase 2.
Yeah.
This is what we aim at here. So we put money aside for this, and I believe that we can bring these three forward to that point. And we will have free cards on our hands there. I'm sure that we can make a deal at that time, a turn to an exit, or I think that also with the 3 programs ready to go into phase 2, I think some institutional investors will take a deep dive into this.
Great. We have some questions from the audience. Rafael, Linus, and Jonas. Hello, Jonas. It's nice to hear from you. They all ask about tesofensine and the progress in Mexico, and I believe perhaps you answered that question earlier, so I hope you will accept that I move on. We have a question from Joachim. Given your description of the partner strategy success, would you say it's fair to say that stocks in Saniona is a low-risk investment? Perhaps that's a difficult question to answer as a CEO, but could you give it a try, Thomas? What do you think about the risk level in the company now compared to, say, historical levels?
There's one thing is that we have a very broad pipeline, as you can see here. And it means that failure in one program or one product is not the end of the world for the company. We also are currently focused on progressing assets over the next 3 years, which we can afford to finance over the next 3 years. So we have taken out a lot of financial risk in this company right now after the deal with Acadia. And then we have, programs partnered and financed by partnerships. Even tesofensine, according to Radar, I think it only accounts for 4.6% of our tech value right now. So even the most advanced asset is not really filling up everything. This is something which they take into consideration. But you never know. Stock markets is very difficult to predict these days, and there's risk in biotech.
Well, I think it's a good answer. At least you can separate the operational risk and financial risk, and obviously the financial risk has gone down anyway, so the total risk level, all else equal, should be lower. We have another question from Jonas, whom I know is a skilled investor, and he wonders, what are your plans with S903? Are you planning a separate phase 1 study for that candidate?
We have not put aside money on this. We are focused on the free triathlon on this slide. SAN903 is positioned for inflammatory disease, and particularly in IBD. So we don't have money to put this forward, and that's a pain. But it's positioned for partnering, and let's see what happens. Okay. It might be that we need to do a phase 1 de-risking study before we can sell it, but we still see some people are approaching us and go into the data room on this program.
Right. And final question from Jonas. Could you say something about the timeline for S2355, 2465, and 2290?
Yeah, as I try to do it, what are we going to do this year? And basically for 2355, we expect to be ready to file for a phase 1 study at the end of the year, and maybe even start the phase 1. And the 2 others will come with a quarter later each. So right. One in the first quarter and one in the next quarter. And the phase 1 study is typically one and a half year before you have the top line. You could sometimes do it faster. And then we have the data, and we will keep, we'll go out and make business development activities from day 1 to say when the data will there. So we have lined up the companies who are interested, because it can take quite a while to make a large collaboration agreement, and you need to kiss a lot of frogs before you find the princess. So we gotta get started now.
Right.
Mm.
That's all the time we had, I'm afraid, Thomas. So I'd like to thank you very much for your informative and interesting presentation. I wish you good luck.